Welcome to Unlocking the Upside, where we bring Wall Street wisdom down to earth. I'm Jeff Robinson, and after 25 years in finance, including running a top-ranked investment research division, as a Wall Street managing director, I've learned a thing or two about what makes markets tick. With me is my co-host, James, who brings youthful brilliance and a new perspective to every conversation.
That's right. And I won't hesitate to challenge your Wall Street assumptions, Jeff. Looking forward to some great discussions.
In each episode of Unlocking the Upside, we'll peel back the layers of conventional market wisdom and explore opportunities hiding in plain sight. Our goal is to equip you with the analytical tools and frameworks that even seasoned investors often overlook. Whether you're just starting your investment journey or managing a complex portfolio, we'll share battle-tested insights from real deals and market cycles. We'll break down sophisticated concepts into practical strategies you can use right away.
For listeners who want to dive deeper, check out our Insight One platform in your App Store. It's packed with professional-grade tools and resources to help you put these ideas into practice. Set up an account today and get 14 days of free access to everything. That's over 3,200 digital assets and 650 hours of content. This is Unlocking the Upside. Let's discover what the markets are missing.
The London Stock Exchange is hemorrhaging companies at an alarming rate. In 2023 alone, 88 firms have jumped ship, with only 18 new listings to offset the exodus. It's a financial earthquake that's reshaping the global market landscape.
Hang on a second. Those numbers are staggering. What's driving this mass departure?
Well, it's a perfect storm of factors. First, we're looking at a valuation gap that's become too big to ignore. The Footsie 100 has gained about 8% this year, which sounds decent until you compare it to the S&P 500's whopping 27% increase. It's like watching two runners on different tracks, and London is falling behind.
But couldn't that just be about sector composition? You know, the FTSE's heavy weighting toward old economy sectors versus the S&P's tech-heavy lineup.
That's a fair point, but there's more to it. We're seeing a self-fulfilling prophecy in action. When companies see their peers trading at higher multiples in another market, it creates a powerful incentive to relocate. It's the financial equivalent of the grass is greener on the other side. And I get this, since 2020, we're looking at about £280 billion in market value that has either left or is planning to leave the FTSE 100. That's roughly 14% of the index's total value.
Oh, wow, that's an enormous amount. So, what kinds of companies are we talking about here? Are these struggling firms looking for a lifeline?
That's the thing, they're not. We're talking about industry leaders making calculated moves. Take Flutter and CRH, for instance. These aren't distressed companies, they're powerhouses making strategic decisions about where they want their shares to trade. And then there's Ashtead, which generates 98% of its operating profit in the US. It's almost like they're saying, if we're doing most of our business in America, why not list there too?
So it's more like watching chess grandmasters repositioning their pieces on a global board. But surely the UK government isn't just sitting back and watching this happen, right?
You're right, they're not. The UK government and regulators have been trying to stem this tide with market reforms and changes to the pension system. But here's the kicker, these reforms don't seem to be moving the needle. In fact, one FTSE 250 executive recently told the Financial Times, and I quote, "I don't think it's high on the government's priority list, even if it's something they regularly trot out." That's a pretty damning indictment of the situation.
Ouch. That doesn't sound promising. So what does all this mean for investors? Are there any opportunities hidden in this upheaval?
Well, that's where it gets interesting. For one, this trend could accelerate. There are 9 companies in the FTSE 100 that currently generate more than half their revenue from the US. They might be eyeing the exit as we speak. And let's not forget about the potential for arbitrage opportunities. When companies announce their intention to move listings, we often see price dislocations that savvy investors can exploit.
So it's like a game of financial musical chairs, and some people are going to find themselves with prime seats when the music stops?
Exactly. But here's the bigger question. What does this mean for the future of global financial centers? Are we moving towards a winner-takes-all scenario in global capital markets? It's like watching a giant ship trying to change course. It takes time and a lot of effort to shift that momentum.
That's a fascinating possibility. But surely there must be some counter-arguments to this trend.
You're right. And it's important we consider those too. David Schwimmer, the chief of LSEG, argues that the idea of US listings offering higher valuations is a myth. And there's also the potential wild card of Sheen's planned IPO in London, which could breathe new life into the market. But, and this is a big but, markets are ultimately driven by momentum, both positive and negative. And right now, London seems to be caught in a negative feedback loop that could be tough to break without some dramatic action.
Well, that's certainly a lot to think about. So, what should individual investors take away from all this?
Great question. For individual investors, the key is to stay informed, but not to panic. These shifts create both risks and opportunities. If you're heavily invested in UK-listed companies, you might want to keep a close eye on their plans and performance. On the flip side, there could be opportunities to capitalize on price dislocations as companies move between markets.
And I suppose it's also a reminder of the importance of diversification, right? If you're too heavily invested in any one market or region, you're more vulnerable to these kinds of shifts.
Absolutely. It's like the old saying, don't put all your eggs in one basket, or in this case, don't put all your stocks in one exchange. And it's fascinating to think about how these macro trends can affect individual investment decisions. It's a perfect example of how global events can have very personal financial implications.
That's a great point. These aren't just abstract financial news stories. They're about real changes that can affect people's savings, retirement plans, and financial futures.
Exactly, and that's why staying informed about these big picture shifts is crucial, whether you're a seasoned investor or just starting out. It's also worth noting that this exodus isn't happening in isolation. It's part of a broader trend of companies reassessing where they want to be listed based on a variety of factors.
Oh, interesting. What kind of factors are we talking about here?
Well, it's a combination of things. There's the valuation aspect we discussed earlier, but also considerations like regulatory environment, access to capital, and even geopolitical stability. For instance, some companies might be looking at the ongoing Brexit fallout and deciding that London no longer offers the same advantages it once did. And it's not just about leaving London. We're seeing interesting movements in other directions too. For example, there's been a trend of Chinese companies delisting from US exchanges and moving to Hong Kong or mainland China exchanges.
That's fascinating. What's driving that particular shift?
It's largely due to increased regulatory scrutiny in the US and geopolitical tensions between the US and China. Some Chinese companies feel they can get better valuations and face less scrutiny by listing closer to home. It's another example of how global financial markets are constantly evolving.
So it sounds like what we're seeing in London is part of a larger global reshuffling of the financial deck, so to speak.
That's exactly what it is. And that's what makes this story so compelling. It's not just about one market or one country. It's about the shifting tides of global finance and how they affect everything from investment strategies to national economies. It's a reminder that in the world of finance, the only constant is change.
Well, I think we've given our listeners plenty to think about. The Great London Exodus is clearly a story we'll be watching closely in the coming months and years.
Absolutely. And whether you're in London, New York, or anywhere else in the world, staying informed and adaptable is key to navigating these shifting financial waters. So keep your eyes on the markets, stay diversified, and always be ready to adapt to change. That's all for today's episode of Unlocking the Upside. Thanks for tuning in, everyone.
And we'll see you next time for more fascinating stories from the world of finance and beyond. Take care.